What's good? It's your boy, He That Trades, back with another video. So this is gonna be part 3 of the part 2 video of the market breakdown and analysis. So, yeah man, if you guys haven't watched part 2, I would say go watch part 2 so that you'll be able to understand what it is that I'm doing. So, back to analyzing US30, the way that I analyze US30 on the funded account that I have with Comet Capital using RCG as their brokerage. As you can see, 100k, then withdrew 4.1, balance 93,800. Alright, so let's do this. Right, what we need to do now is that we already have a first confluence. Right, first confluence is our support and resistance. Support and resistance lines. Right, anything below it, we need a green candle, red candle, push down. Green candle, red candle, push down. Green candle, red candle, push down. Anything above it, we need a red candle, green candle, push up. Red candle, green candle, push up. Anything below it, green candle, red candle, push down. Green candle, red candle, push down. Anything above it, red candle, green candle, push up. Red candle, green candle, push up. Green candle, red candle, push up. Red candle, green candle, push up. Red candle, green candle, push up. Anything below it, green candle, red candle, push down. Green candle, red candle, push down. You get the gist, right? So as that guy was explaining in the series industry, Oguti, that if you put your trend lines, your support and resistance lines accordingly, you end up having a domino effect. So if you do this right, it will end up falling onto the next piece of domino, revealing what you also need to do. So right now we have a first confluence, support and resistance lines that correlates with the movement. Anything below it, green candle, red candle, push down. Anything above it, red candle, green candle, push up. Now we're going to add our trend lines. Trend lines, trend lines are mostly parallel, right? So because trend lines are parallel, let me just change the color quickly. So you have it like this. And then the moment you have your trend lines like this, right? So this parallel, you have it like that. You then start to put in your trend lines, right? And then of course you have a trend line for your overall, like your daily and your weekly, and then you have your trend line within the trend line, which is for your 30 minutes, 1 hour, 4 hours, even 15 minutes if the analysis is done correctly. So now I'm adding my second confluence, which will be my trend lines. Now the way in which I do my trend lines is different from everyone else because of the thing that I'm looking for. So what I'm looking for is this, is whenever the market touched below it coming down, I need a same movement. So I'll look over here, for example. Let me just do this. Let me change this color. I don't like this color. Let me make it yellow. There we go. Alright, so remember, like I said, we need a green candle, red candle below the resistant line, below the white line, which becomes a resistant. And because this is also below the blue top of the trend line, we thus then have a confirmation that this is positions for sells. Then for the buys, we're also looking for the same thing, but you'll notice that at this area we closed outside of it, we didn't close within it. So when we came back into the trend line, we came and closed at this part over here, which was above the white line, which is thus then a support, and we closed above it with the red candle, green candle, push up, as well as closing above the blue bottom of the trend line, red candle, green candle, push up. And we go on, we look at it another area. We have this area over here. Green candle, red candle, push down. Came, broke, came back underneath, but we weren't underneath this resistance line. Only at this area where we had a green candle, red candle, push down below the white line, which is thus then a resistance, as well as at the top of the trend line, signifying that we're going down. So we have this area over here. We look for another part where the market touches the trend line. Is this area over here. Does it correlate? Yes, it does. Below the white line, which is thus then a resistance, below the top of the trend line, which is also a resistance, but it's also signifying that we're going down because we touched the top of the trend line. So does it correlate? Green candle, red candle, push down. Green candle, red candle, push down. Green candle, red candle, push down. Shoulder, head, shoulder, push down. Same thing here. We are above the trend line. We're above the resistance, which is now a support, but we are below the resistance. Green candle, red candle, push down this area. Now we have our confluence on a daily time frame. This is what it looks like, right? On a daily time frame, this is what it will look like on a daily time frame. Now, if I change the structure of the chart make it from a candlestick and I change it to a line chart, you just then start to see that okay, the market, whenever it pushed down, it came down here, touched there, came back up. This is where we touched again, came back up, touched there, came down, touched there, came down, touched there, came down. We then start to see that okay, this is how we're moving. Then we draw another trend, this area over here. And then we draw our trend within the trend, and the same rule applies within the trend because here we have the same thing. We're looking for the same thing where the trend line descends. Green candle, red candle, below the resistance, below the trend line at this area over here. Let's just change that so that we know we are within the trend of the trend. Right. Then over here we didn't have this formation, which was we just had a red candle. So here, the next part, we have a red candle, green candle closing above the trend line. Thus then it becomes this area over here. And then we have this area over here. We kept pushing up, broke above the trend line, but it's only at this area, green candle, red candle, push down, that we actually had a movement of a descending trend. So here we then can do the same thing. Over here at the bottom of the trend line, we're looking for momentum going upwards. Green candle, red candle, push up. Green candle, red candle, push up. However, at the top, you're looking for a descending trend. Green candle, red candle, push down. Green candle, red candle, push down. We then start to see the same pattern with the first confluence, support and resistance. We now have a second confluence on the trend lines. That's our second confluence done. Even if we change it from a candlestick chart to a line chart, we then start to see that the area in which it comes out and descends, that's the area that we're marking out because it follows the pattern on a candlestick. Is this green candle, red candle, push down, red candle, green candle, push up, green candle, red candle, push push down, red candle, green candle, push up. And if you check it on the line chart, we then start to see at this area, that's where we're looking for sells, looking for buys. Now that's our second confluence. Our third confluence is then an indicator called a trend catcher, and we add this trend catcher onto the chart. We then start to see that the trend of the market, that's where we start to identify, because this is a trend catcher, so it'll tell us the trend. So notice that when I was doing the second confluence, the trend lines with the squares, that it correlates with the trend catcher, that this is a sell, that correlates with it being below the resistance, below the top of the trend line, green red candle pattern pushing us down, sell signal. We didn't have a sell signal, a buy signal at this area, but we had a buy signal at this area, which was above the trend line, um, having a red candle, green candle above the trend line, bullish. At this area, we had a green candle, red candle below the trend line, below the blue trend line as well as below the resistance area here. Thus then having our sell momentum coming through. Our buys at this area, same thing. Sells at that area, same confluence there, same confluence there, same confluence there, same confluence there, same confluence there. At this area, we are now about to have our confluence, right? And this works for every time frame. Go on a 1 hour time frame, you see that we have our cells there, confluence there, we push down, confluence there for our buys, buy trend, sell signal for our sells, confluence going down. For our buys, red candle, green candle, push up above the trend line, push up, buy signal, sell signal, green candle, red candle, below the trend line, below the resistance, push down. We didn't have a buy signal here because it didn't follow the pattern of red candle, green candle, closing above it, pushing up. But we did have it over here, red candle, green candle, closing above the trend line, closing above the support and resistance line as well, that's being bullish. So now I can see in real time where the market is about to change. So you can see that on a 1 hour time frame on US30, we don't have a trend catcher signal that we are bullish. However, we have the following other two confluences, which is the trend line closing above it with the red and green candle confluence going up, above the trend line, red candle, green candle pushing up. However, if we go to a 1 minute time frame, you'll see that we actually have it. You have a bull signal here for a buy. 5 minute candlestick, we have a buy signal. Green candle, red candle, push up. 15-minute candlestick, green candle, red candle, green candle, red candle, red candle, green candle, push up with the confluence of it being above the trend line as well as a buy signal. 30-minute time frame, we haven't had it yet, which means that on a 30-minute time frame, we have still yet to form our buy confluence, which means we could retest the trend line or come down to form a higher low, thus then breaking through. So we could form this type of movement. For us to then have our buy confluence, and then we'll have a sell signal at that area. Alright, that's just my analysis on that. But then our fourth and final confluence, right? So we have our trend lines, our support and resistance lines, following the rule of green candle, red candle for sells, green candle, red candle, green candle for buys. We have our trend lines with the squares, identifying the parts in which the trend actually goes bullish or goes bearish. We have our trend catcher indicator telling us where and when the market has changed direction. We're now adding our final indicator, which will be our supply and demand, which you put in your supply and demand. You then start to see where the market really is going to push down. So let's go on a 15-minute time frame. You see that we have a thick red supply zone here below the resistance, and you then start to see that, okay, we have the same pattern coming in. Green candle, red candle, we push down. green candle, red candle, we push down. However, whenever we at our demand zone, we have a red candle, green candle, push up, red candle, green candle, push up, which still follows the confluence. So whenever you see our demand zone having this and this, but we don't have the pattern of a red candle, green candle, or a green candle, red candle, just know that these are going to be invalidated. So we have a bullish signal here that we are going bullish, but then we don't have a bearish signal saying that we're going bearish, but we can clearly see that we are bearish at this particular moment, right? And even if you take it this way, you can see that we are also bearish at that particular moment. But overall, we are looking for buys, remember that. So we are still bullish at that particular area. So one thing that I can say is we need to drop down to a 5-minute time frame. Drop down to a 5-minute time frame, we then start to see that, oh, even though we were bullish here, the reason why we came back down was because of this green candle, red candle pushed down below the resistant area. Then we came in and had our supply zone. Green candle, red candle pushed down, green candle, red candle pushed down with a sell signal coming down. Remember, look at here. Anytime we hit the demand zone, we need to have red candle, green candle, push up. Red candle, green candle, push up. So I can definitely say that our bullish trend is looking somewhat like this. So that if I drop down on a 1-minute time frame, I should see a buy signal somewhere around here. And here we have it over here. Red candle, green candle, push up. Red candle, green candle, push up. Red candle, green candle, push up with the buy signal hitting our demand zone, going up. And the fact that we have another demand zone over here with a buy signal means that on a 1-minute time frame, we're already bullish. 5-minute candlestick, we are becoming bullish. 15-minute candle, we are currently neutral. 13-minute candle, 30-minute time frame, we are forming our bullish trend. And then on a 1-hour time frame, we haven't actually showed this. So this is how I analyze, and this is how I do my charts and my analysis, which is why I don't like trading. So even on Nasdaq, it's the same thing. Nasdaq, demand zone, buy signal, on a support, red candle, green candle, push up. We have a supply zone. We came down, rejected off that supply zone with the following confluence: green candle, red candle, push down, retest the supply zone with the form of green candle, red candle, push down. So this is nothing more than a retracement for us to hit our support zone or a demand zone for us to continue going up bullish. But overall, on a 4-hour time frame for Nasdaq, we are selling because we have sells selling here, we're selling here, which means that we are now changing our trend. So sell there, changing our trend into a bearish movement. Even if we take our thing and we come down here, we then start to see that, oh, okay, even at this particular moment in time, we're still bearish. That particular moment in time, we're still bearish. So you get to see that, okay, we're now changing trend in real time. On a 1-hour time frame, we then start to see that, oh, okay, sell there, sell, sell, sell. And these are all sell signals. Selling there, selling there, selling there. And then anytime we hit this demand zone, we're buying. So we have a double bottom here going up, probably retest this area for another sell signal for us to go down. This strategy the way that I analyze it, helps for all time frames, even currency pairs, even USD JPY, Great British Pound USD. So I wanted to make it a part 3 and 4, but then time is not on my side. So yeah, man, that's your boy, He That Trades, signing out.